Yo guys, welcome back to Stock Talk Insider. Today we will be talking about one of the more trending stocks on this channel, and that is of course Honest Company, as you see before me. So we will be talking about Honest, where it stands, and a little bit what I talk always about. They are just proving themselves to be actually a good player in the space that they're operating, and just in all that they are just focusing on getting the profit consistent and just having a good financial balance sheet before they expand to actually growing their business. I have some key metrics that are fun to watch at and describe literally what I am saying, and they prove what I am saying a little bit more in the visual. So that's what we will be talking about. Honest Company and the Honest stock. So the Honest Company began with a simple mission: give families products that are safe, reliable and transparent. From diapers to everyday care, the brand was always built on trust, and that trust remains our foundation today. So if I put myself here, you literally see this on the homepage: clean conscious formulas, cruelty free, in-house toxicologist. So they really want to push forward that they are not using wrong chemicals or all of those things that are not good for someone. So they really want transparency and thoughtful designs, because I do have something that you can align with that, and that is that AI will grow. AI will become more and more and more something that we will be used to, and people will actually really use AI the way they want to. So using AI, like a mother will use AI to see what is in that product, what is in that product. So transparency becomes very important at that point, because if you have a company that isn't transparent, but when AI is very, very much advanced, and people can look up what is actually in that product, and people see that there's a lot of chemicals that are actually not good, or that are not really the thing that they would like to have in the product that they use, then that transparency with Honest will help Honest to be one of the more reliable companies, which is a very big factor to give you the premium price. So that's a little bit of what Honest is doing so well. And having said that, going forward now is that a new chapter under Carla Vernon, and since a couple of years, is, well, very, very exciting. So in my portfolio, by the way, we hit almost 61k this week, which is a very nice milestone for me. Also, so far I did very well, of course, but Honest Company, we do have 650 shares of Honest. I believe that I will buy more shares at the beginning of next month and probably the month after. I will always keep buying if it not goes beyond $6 to $7, because I believe that $6 to $7 is the normal price for this company, in my opinion. The way they operate, the revenue, the net income, and just how small the market cap actually is for the company and how it's operating and how the future looks bright for them. So actually the company is very strong, very good fundamentals. The only thing that is holding Honest back is that some people might think that the business is actually very boring. And second, maybe that can be put on one, is that the revenue growth isn't there yet. In my opinion. So it's around 5 to 6%, and that came from 4%. So the guidance went up to with 2% to 5 to 6%. But yeah, in my opinion, Honest, very good one. We have 650 shares of it, so that's around 2.5k in dollars. I wanna put that to 1,000 shares. So under CEO Carla Vernon, Honest has entered a deliberate new phase. Management has restructured priorities, tightened financial discipline, and focused squarely on stabilizing the business. The goal is clear: build a strong, resilient company first, a ship that will weather storms, then pursue accelerated growth from a position of strength. And that is also what we see on Seeking Alpha. So Kurt Christensen, who has made this blog, Well, this is actually what he pointed out. So the Honest company has achieved profitability and improved margins through its transformation and initiative, but revenue growth remains modest. And this is literally the one thing you see everywhere about Honest, that revenue growth remains modest to low. And that's actually one of the things that holds the stock back from going a couple of dollars higher, in my opinion, and I think that that's the case. Honest strategy focuses on margin enhancements, operating discipline, and brand maximization, with distribution expansion and product diversification as key growth drivers. So that's literally what I mean, and that's literally what I say that Honest is doing right now. They do focus on the margin enhancement and operating discipline, so that they have the brand that they have right now, so that they can maximize what they already have. And with the distribution expansion, as literally he said here, with the distribution expansion and product diversification as key growth drivers. And then the second one, this is actually also in line with this one, and with what I am saying is that despite a strong balance sheet and alignment with consumer trends, Honest faces risks from slow top-line growth, competition, tariffs, and share dilution. But again, they are, with Carla Vernon, weathering all of these things. And they are actually very strong in what they bring out in their earnings report. So, giving high valuation and uncertain growth, I rate Honest as a hold, awaiting stronger revenue momentum before considering an additional investment. So what he means is that he personally wouldn't invest as long as the revenue growth and momentum stays where it is today. But of course, well, I am already investing because I know that they are just, with Carla Vernon at the wheel, they are just literally doing the best they can in improving the margins and stabilizing the whole financial picture of Honest. And only then, when Carla Vernon and their team thinks that they are ready for bigger revenue growth, they will operate towards bigger marketing, bigger revenue growth. And I believe that they will go to like between the 8 to 10% in a year or 2 or 3. And if you look at 5 years, probably, like if you look at the side, things like skincare and makeup will already have improved and be bigger in the market that they are operating in. So I believe that together with that, they will go to 8 to 10% in 2 to 3 years, but in 5 years they can go to like 15% in growth. I believe that personally, and you also have seen that with Elf Beauty, they also skyrocket from one point to the other, just like it was nothing. And yeah, I do believe that Honest has a very good chance in doing that. So from the diapers to beauty and self-care, Honest is no longer just a diaper company. The product portfolio now spans baby care, beauty and self-care, with expanding distribution across retail and direct channels. That diversification creates multiple revenue streams and a broader consumer base, critical ingredients for sustainable long-term growth. Current focus is that they will stabilize and build recurring revenue. Today the focus is stabilizing revenue, strengthening margins, and establishing predictable cash flow. Management's priority is to avoid the instability of the past by creating healthy recurring income streams. Only after the foundation is secure will Honest shift the emphasis to an accelerated growth investors want to see. But also, investors don't only want to see the revenue growth. Me personally, as an investor, there are way more investors than only me that also see it this way. Also like the way that they are establishing predictable cash flows, and that the management priority is to avoid instability. So we have two key things that they are doing right, and we already have. So besides the revenue growth that we don't yet really have, we do have stability, and they are building predictable cash flow. So that's very important to have. And that's a very mature way of looking at this company, which is actually a very young company and a very small company. I do believe that 450 million market cap is very low for what they are doing. So Why this strategy matters is that Carla Vernon's playbook is about discipline first, shore up the balance sheet, optimize operations and protect margins. This may feel conservative in the short term, but it reduces execution risk and positions the company to scale aggressively when market conditions and distribution reach a line. Valuation and investment thesis is that from an investor perspective, there's an argument that Honest currently is underappreciated with an estimate enterprise value in the range of 500 to 550 million and quarterly revenue approaching roughly $100 million. The annualized revenue run rate can represent a meaningful fraction of that valuation. In our view, those numbers suggest the company is undervalued today. We estimate a fair current share price in the range of $6 to $7, as I already said, and see potential upside to around $21 per share over the next 3 to 4 years, assuming the company executes its stabilization strategy, resumes measurable top-line acceleration within 3 quarters, and capitalizes on its expansion into beauty and self-care, because that's a very big market and an important one for revenue growth. So there are some risks and realities, of course. Execution risk is real. The short-term growth runway is intentionally muted as the business stabilizes. Consumer presence, retail partnerships, and macro conditions will all impact the timing and magnitude of revenue acceleration. Management's task is to maintain discipline while reigniting growth, and that balance will determine returns. Also, one thing I wanted to show you guys is that this is from Yahoo Finance. What they actually wanted to show you guys was the ROCE. What is it? Well, the ROCE is a metric for evaluating how much pre-tax income in percentage terms a company earns on the capital invested in its business. To calculate this metric for Honest company, this is a formula, but we will not look at this. This is much easier to look at. So actually, their pre-tax income in percentage terms is that 3 years ago they were down almost 20% in return, and now they are already at 2.3%. So that's the big reason why Carla Vernon came in. She made it 2.3% with her team and got it away from the minus 20. So this is already a sign of people looking at those small things and showing you guys that Honest is literally coming back from where they were. So one thing that was interesting is this one. We're delighted to see that Honest company is reaping rewards from its investments and has now broken into profitability while the business was unprofitable in the past. It's now turned things around and is earning 2.3% on its capital. Interestingly, the capital employed by the business has remained relatively flat, so these higher returns are either from prior investments or paying off, or increased efficiencies. So we know that they don't really invest at this point, certainly not too much in their marketing, but literally invest in efficiencies. So this is, in my opinion, I think the one that brought us to the 2.3%. And of course, the prior investments that are already paying off. But I do think that this is the main reason, which has led us to the 2.3%. This is the main reason, in my opinion. So with no noticeable increase in capital employed, it's worth knowing that the company plans on doing going forward in regards to reinvesting and growing the business. So if you're looking for high growth, you'll want to see business capital employed also increasing. But of course, we still know that 2.3% is better than minus 20%. And in my opinion, again, that is because mainly they increased efficiencies with Carla Vernon at the wheel. So the long-term view is very, well, I'm going to say it different. The long-term view, in my opinion, is just that if Honest successfully builds its stronger, steady revenue streams and efficient operations keep going, and a clear product expansion path is also being laid, the company can move from stabilization to scalable growth. Together with the stabilization, the combination of trusted brand equity, broader product categories, and disciplined management under Carla Vernon creates a credible path to meaningful value creation for shareholders. And yeah, just for closing the video, the Honest Company is more than a familiar consumer brand. It's a company transforming itself from a single category player to a multi-category consumer platform. So diversified company, and stabilize first, then grow aggressively. That is the strategy, in my opinion, that is playing out. And that is promise, honest care, honest business, and a potential very different company a few years from now, just as it is already a whole other company than 3 years ago. So thanks for watching this video. If you have enjoyed it and you have something meaningful about this video, please leave a like, and I'll see you guys later. Also, don't forget to subscribe, and I'll see you guys later. Bye.